Hello and welcome back to the channel. In this series, you're going to see 25 days of trade analysis. I am calling it 25 days of Tradesmas. In this Tradesmas series, if you are going to be watching it, I highly suggest that you take the opportunity to be participating in the giveaway. I would love to give back to you guys in the YouTube world who have supported me and followed me. I am always very interactive in the trading floor community, but I know there's a ton of you who have followed me for a while who aren't in there, and I want to be able to give back to YouTube as well. So from the bottom of my heart, thank you very much for all of your guys' support here on my YouTube channel, and I am wishing you all the warmest of holidays, whatever holiday it is that you celebrate. I personally celebrate Christmas, so therefore I am doing the 25 days of Tradesmas. But whatever your holiday season is, I wish you and your family and loved ones a very warm and happy holiday season. With that being said, I am doing the giveaway here on my channel. So for every day that I do one of the Tradesmas videos, if you do any sort of interaction, if you like, comment, or subscribe, you will earn an entry to be able to qualify at the end on the 25th day to be part of the drawing that I am holding. I will draw a winner for the giveaway. I will announce the winner on the 26th of December. The prize will be to win a yearly subscription to the trading floor. So if you guys are interested in it, make sure that you are doing the likes, subscribe, and comments. Obviously, you cannot resubscribe over and over again, but don't worry. You will get 3 credit points towards that, but then every day following it, as long as you leave a like and you leave a comment, you'll get 2 additional entries for each of those. In addition to my giveaway, if you guys love giveaways, we are doing one on the Trading Floor YouTube channel as well. It's the same thing over there in order to enter as well, though it is interaction. So if you like, comment, and subscribe over there with that channel, you are going to be entered into a drawing at the end on the 25th as well. We will draw a name for somebody to win a $1,000 cash prize. You do have to have PayPal to accept this prize, so make sure that you can accept PayPal if you're going to go over there and enter into it. But I think that's a really nice prize. I think most people this time of year would love to have $1,000 extra. So make sure that you guys are also checking out the Tradesmas that we are doing on the trading floor. And there are lots of styles of trading happening over there on their Tradesmas. You will see all of our live streamers and our staff submitting videos. So if breakout trading isn't really your thing, or maybe my style isn't your thing, no worries. Go check out the Trading Floor's YouTube and make sure you are subscribing, and commenting for an opportunity to win $1,000 cash prize at the end. Okay guys, let's get into the video, and happy holidays. Hello and welcome to day 15 of Tradesmas. I'm going to show you guys the zoomed out screenshot of it. Ignore all the smiley faces, don't worry about them. That looks crazy. But just focus on the fact that the market had dropped. So I'm saying that because the trades you're going to see today are actually the trades from the 27th. So this $130 one and this $197 one. If you've been watching all along, then you know by now that that probably means that I had what I call bust trades. Meaning that the market didn't end up going in my favor, or I moved my break-even trail a little bit too soon. And my break-evens typically are slightly in profit, which is why you're seeing a slight profit with them. And that's just my risk management plan. You can check out probably every video before this. I feel like I was having a lot of them in November that you guys are seeing. But we are now in October. And it does start to get less and less that happens, but they do still happen. It is part of my plan. And if you guys are interested in learning more about it, you can check out the previous Tradesmas videos. I will link them in the upper right-hand corner for you guys. All right, paying attention to the actual chart, what I'm pointing out here, and all I want you to focus on, is the fact that the market really, really tanked. These are trades that we went over before. So in the last 2 videos, if you guys have been following along, you guys saw the trade from the 13th. This was my 10R trade. And then you saw the trade from the 17th. This is my 1.5R trade. Both of these trades are in previous videos. Again, those are linked above if you are interested in seeing them. But I wanted to zoom out to show you guys what the market did between the 17th and the 27th. So this 10-day hiatus where I wasn't trading, you can see that bearish bias I had was correct, and the market just continued to tank. And I never got a really good retracement that I was interested in, and actually getting another position in here. So I know, 10 days in between is kind of a long time, but I was really looking for a nice pullback of some sort. What you guys see here, where the market comes down, comes back up, and that's where I got in again. I never really got like a decent one. There's like a little one here, but it didn't come back into my zone. It does break below here and comes back and touches the zone for a retest. But I don't know. I wasn't just loving any of these. At that point, the move was so, in my opinion, pretty extended, and the retrace just wasn't deep enough. If you know fibs, then if you visualize a fib and like what a 50% retracement would look like, imagine that. I don't draw fibs on my charts, but I always in my head imagine them. Maybe in like a future video or something, I'll show one just so you guys can follow what I'm talking about. So if you want to see what that looks like, comment below and let me know if you're kind of lost on it. But basically, it would be like the market always retraces. So you have a really strong trend. The market has to retrace. Usually there's like a 50 area, and, you know, slightly above that in indices, they can retrace even deeper. They're pretty notorious for retracing deeper. So when you're looking at like a pretty big move like this and there isn't a deep retracement, I'm always a little leery that like maybe it's not strong enough of a retracement to get the next drop. Obviously, I was wrong because, you know, in here there was another drop. But for me personally, from my analysis and the way that I trade, like there just wasn't deep enough of a retracement into this zone for me to be comfortable. Maybe in this area would have been something that I could have maybe thought about. But I don't think I would have been interested. Honestly, it just looks like consolidation around that zone. And maybe even this guy here would have been a really nice one. But I wasn't in the markets these days. These would have been potential situations, like maybe this one here where you had already had a retest in a nice zone and then a bearish smiley breaking out of this area. That could have been like the last leg of that trend, and you could have targeted this level. That was a previous level that's like from before. But anyway, maybe something like that. But nonetheless, I'm not trying to give you guys a trade that I didn't take and a breakdown of a trade I didn't take, but that's kind of why I wasn't really looking anyhow. I never really got anything that I was interested in. And I did have a price alert set at 15,000. You guys can see this number here, and just imagine like a line being drawn over to this area, which was the top of the last, in my opinion, the last like pullback or retracement. But it never came back to like that area or that number for me to think that it was a deep enough of a retracement of the overall move. So anyhow, enough about retracements. That was what I was looking for. I did have an alert set there. It never came there. So I never actually had a reason to look back into this for like another drop. But there was potential here had you been watching this every day. And that would have been this one. That would have been like the last leg of this. You could have gotten in and taken to the next zone here, or maybe even to this one. But anyhow, that is my non-existent trade analysis for you guys. All right, let's get into the actual trades I did take. So just bearing in mind that there was a huge drop, and these are actually trades over here on the 27th where I was trading. And I want you guys to just understand like why I would, when I say I was in consolidation and there was lack of momentum, I want you to understand why, what I mean by an overextended trend. The trend was just really was cruising down, never had a strong retracement, and it was definitely a little bit overextended. Looking at NASDAQ on the 15-minute time frame, I like the 15-minute. It's like my favorite time frame. Most people know that by now. I do mess on the 5-minute and the 1-minute and the 1 hour and the 4 hour, but 15-minute, for me, it's the really good like middle of all of that. I kind of just, in my head, it tells the story. So use whatever time frame works for you guys in your head to tell your story of the market. But for me, I like 15-minute the most. I like to be able to use the higher time frames for my bias. I like the lower time frames to like refine my entries, but I really like the 15-minute to kind of give me an overall idea of like, where am I looking to go before I start refining? With that being said, here's the 15-minute time frame. We know from looking at the previous screenshot that we had been trending down pretty hard. And the current market that we're working within is here. So this is our zone that we are working within. And unlike the previous zone before that it had come crashing down in, so this was your previous zone, and it broke into this new zone that we're working within, the market does not come down and continue to create new lower lows. It stops its lowest low here and actually continues to make consolidation in more of a mid-zone area. So if you haven't watched my previous videos, a quick recap of what it means is just this is your zone you're in, and then your mid-zone is the middle area of that zone, where sometimes what you will see, especially when in consolidation, is an accumulation of price like you see here in this zone and over here in this zone. So what you'll see is a mid zone here that I drew. And I was looking to trade the mid zone break, which is definitely risky. So please know that this is not something that I suggest doing unless you are like intermediate or an advanced trader. And even then, please proceed with caution because mid zones are they're hard. They're difficult because the overall zone is actually here. So this is your resistance and this is your support. And we're talking about a middle area, and you need to make sure that you get a break from it and then also still have a decent risk to reward to come to the resistance or to the support. And that can actually be pretty difficult to do, but sometimes it works out when you have a tight floor of support like I had here. So you have these touches and you have a very nice like clean floor, and the break for me happens to be pretty close to the floor or the support here. So I was able to keep a tighter stop loss, which is nice. I will show you a little bit more zoomed in for what I was looking at. So this is our mid-level. And I did mark again, like you can see my floor. Those all kind of stay at the same price point, but the highs were getting slightly higher, very, very slightly, creating like a little bit of market pressure and kind of like leaning towards my, maybe there's some pressure to the buying side of things. Maybe we're going to get up to here to retest this resistance in this area. So that was my thought process behind this. We got a strong breakout, a nice bullish candle after it had retested that floor area one more time. So hoping that it would get enough momentum, a nice strong bullish candle with a upright smiley face that comes here to confirm that. But this breakout candle is where I was really interested. And the price, because this is like 15-minute time frame, I apologize, I don't have a 5-minute screenshot of this, but on the 5-minute time frame and on the 1 minute, because I had gone down to the 1 minute too on this trade for like a really clean entry, you'll see that there was like entries that were here. But because this is a 15-minute time frame, and again, apologizing, I don't have a 5 or 1 minute time frame, just know that the candles were in this area for me to come back to. So like there was pressure to break out, comes back, because you know the candle retraces for the whole 15 minutes on this time frame. But on the 1 minute and 5 minute time frame, there was like actual market structure patterns being created. So I did get in on those. With that being said, there were bullish smiley faces on the 1 minute and 5 minute time frame to help support this initial breakout. Candle closes. It does not create new market structure, but in this case, I wasn't looking for new market structure because I'm just looking for the clean breakout of this zone with a bullish smiley face to confirm that I can get in. And I do get that here. It is a little bit around opening, so I knew that like there might be enough volume, there might be enough volatility to just sort of like push the market to touch this resistance area. And I was wrong. I definitely was wrong. You guys can see that. That was my thought process, at least. But I was shooting for something more realistic. I wasn't trying to go above and beyond it. I wasn't looking for the full-on like reversal or anything crazy like that. I just wanted to continue trading within my zone. So the top, like within this area. And I had the mid-level break. So the mid-level break and this risk to reward situation did make sense because I had a nice tight stop loss. I was actually shooting for about like a 5R on this. And, you know, had that played out, that would have been pretty nice. I did get pretty close, which, you know, that's always a hurt piece. And you'll see later on that it actually does eventually get there. So had I kept a bigger stop loss, it would have gotten there, but that's neither here nor there. It is what it is. Still was a good trade, and the analysis made sense for what I was doing with these mid zones. So it wouldn't have made sense for me to keep a stop loss all the way at the bottom of this zone. So like I wouldn't have kept a stop loss all the way down here just to target here. Like this risk to reward situation going from here to here for my stop loss and only from here to here for my reward would have been less than 1, and that wouldn't have made sense for a risk to reward. So I don't regret this trade. I just am warning that it is a risky. I obviously got a little bit into profit, pretty close to my take profit. So I was able to move my trade to break even. It followed my rules as far as moving to break even. So I had my stop loss here. My entry was here. And then this is where I moved my stop loss to in order to secure a little bit of profit and make sure that I didn't just lose the trade altogether. So you can see I moved stop loss from here to this point, and was able to cover my entry to here. And that's the difference between entry and where I had moved my trailing stop to as far as what I made in profit. So that is the difference of the $130.56. So that was this trade. It ends up coming back down, obviously, hitting my stop loss and taking out my trade. I did end up taking another trade too, which is what you guys see here for the $197.76, which was a sell. So explaining to you why I did what I did again, this was my mid zone. I had a break here out of the mid zone, never came up to fully test my resistance, comes back down into my mid zone. And I then at this point, when it was breaking through with this candle, thought, oh, well, I'm probably in the wrong direction as far as the overall zone goes. So if we didn't touch resistance, we are likely going to come down and touch support because it needs to do something within this consolidation area that we're working within. So that was my thought process for the second trade that I took. So as you can see, zone here, the break of the zone, which was here. And I thought, well, okay, well, it must be that we're coming down to our support then to test our support. So you can see that mark up here. And it's basically the flip of what I just showed you for the buy. It's now selling it. So cover the top of our mid zone, breaking out of it, looking to target the bottom of our support, which is the overall zone that we're working on. So the larger zone that we're working in. And come back and retest maybe this area. And as you can see, price does not do that either. But it did come a little bit into profit for me. So I was enough into my reward situation that I was able to move my stop loss to my break even and then slightly in profit. So moving from my entry point to the price that you're seeing here, this difference here is where I get that 197.76. So I was wrong on this trade as well. It was actually right. The first trade was the correct one where it was going to come back up and test again, but it did need to come back into this area a little bit more than I was hoping. And, that's just the reality of trading with mid zones like this. They can be pretty risky. So again, disclaimering it, please be cautious. 1, don't trade consolidation. That's a bad idea. Trading consolidation like what you're seeing here, bad idea. It's risky. And if you are going to trade it, you really should just trade from like the top to the bottoms of it. But even that, please just don't trade it. When you see it going sideways, just ignore it. Just wait for the breakouts. Like you want nice, clean, strong breaks like this that are creating like new market structure along the way. But if you do decide to trade consolidation, you really should be trading from like top to bottom of the zone. Trading mid levels like I showed here, they're really risky. And I'll be honest, like they very rarely work out very well unless you can really like secure yourself safely in them. And like I do that pretty well. I think you guys have realized that by now in the series that like this stuff I do a lot in order to make sure that I stay safe in my trades and I'm not blowing my capital. But you definitely can very quickly lose your capital and go into a pretty bad losing streak trading consolidation. So please heed my warning. Don't trade consolidation if you can help it. That is it for this video. I will see you guys tomorrow for day 16 of Tradesmas.